What's going on, traders? It's going to be a quick video. Today is my birthday, and I do plan on enjoying it. Also, happy Valentine's Day to you. If you are single, then happy Diddy Day to you. Yeah. Other than that, oh man. All right. So let's get into it. We got to talk about what institutions are doing as far as the VIX because they are loading up more calls. So we're going to talk about that. But first, let's get into the triple Qs. Right now, we are at previous highs, 538, 539, give or take. If we just so happen to break higher, we want to see a break and retest of this level. I would say 540. You want to see a break, retest, and then we can head higher. I'm looking at about 542, between 542 548 on the triple Qs if and only if we decide to break higher. A lot of you have been saying there is an inverse head and shoulders pattern here. I would argue and say, yes, this is true, but it's too obvious, right? We've seen this happen before where we've seen, bearish head and shoulders patterns that just don't play out. They'll play out a little bit and then bulls will step in because, everybody notices those head and shoulders patterns. So I would just urge caution, marrying this. Can it play out? Absolutely. But it seems like everybody is noticing that this is an inverse head and shoulders pattern. So you just really want to be careful here. And that's pretty much all I have for the triple Qs. The SPY at a key supply and demand zone as well. At previous highs, is really having a hard time staying above 610. We've seen that all day today. It's also at the bottom of this rising wedge, which is a bearish pattern and it has not played out. The projected move for this rising wedge is at this gap fill at around 584. So if we do just so happen to get bad news over the weekend or maybe next week, you definitely want to be careful and watch out for a break below 607. You break below 607, you're heading towards 605 cycle level. After that, 604, 602. And obviously, your key level from there is 598. We talk about 598 all the time. I don't think I need to go over it any more than I need to. So you really want to be careful here. We are at key levels across the board. We looked at the triple Qs. We're looking at the SPY. We look at the ES. Pretty much the same thing. You're at a key supply and demand zone on the ES as well. You're also looking at this massive rising wedge pattern. You do have a little more upside to go within this rising wedge pattern, and you could be heading towards the top of the supply and demand zone at around 6170, 6160, give or take, before seeing some type of turbulence or even a pullback towards the downside. So you really want to be careful here. Okay. Um, NQ. NQ looks great. NQ actually looks great. We talked about NQ heading towards 2300. It looks like that's exactly where it's heading, right where Jerome Powell originally sold off the market. If we're talking about any higher, I would imagine NQ can head towards 22,500. Highest I'm looking at is about 23,000, right? If into I keep saying into NQ. If NQ gets back below 22K, that is worrisome. I wouldn't say it's too concerning, but it is worrisome. You really want to see NQ get below 22,700 for you to be really bearish. And basically, you're just breaking back into the symmetrical triangle. And then you can start heading as low as the low 21K. So NQ looks fine. Really, your concern here is the ES and even the SPY. And I would even say the triple Qs, considering where the triple Qs is. So definitely want to be careful here, all right? I would not be buying calls in this area until we get some type of confirmation of a break and retest of these previous highs. If you decide to buy calls here, all I'm going to say is don't be surprised you wake up in the middle of a Diddy party with your pants down and there's a cheese crater in one of your hands. What's the cheese crater for? I have no clue, but you're about to find out. Oil up, buddy. Other than that, that's all I have for the ES. So these VIX calls that institutions are loading up on, we look at quant data. And there's a lot. There's a lot. Our Discord bot has alerted to us twice that institutions are loading up on VIX calls. So you definitely want to be careful here. Um, these are dated for March 18th with the strike of, what am I looking at here? Yeah, these are dated for March 18th. I actually clicked on the wrong thing. Sorry about that. But these are dated for March 18th. And as you guys can see, they have a strike of 23. You have one right here with a strike of 18 as well. So yeah, you definitely want to be careful with the VIX. And then you have your, institution that's loading up these calls here. There's others, but we're not going to go through every single spike. We're just going to look at the Discord and see the alerts that we got. So today at 10 a.m. Eastern, we got a VIX call with a 20 strike for March 18th, 71% AI confidence with a 2.83 million premium. We go to our other tab where our boss alerts. These are more accurate alerts. We got another alert saying that institutions are loading up more VIX calls with the 29 strike for March 18th as well. So March may be a very interesting month if we don't, if this doesn't happen sooner. It's not I'm not saying it's going to happen in March. Just because they got the aspirations for March, it doesn't mean it has to happen in March. It can happen next week, you know. So you definitely want to be careful, right? And then speaking of the VIX, and I'm sorry I'm like rambling, but I'm trying to rush through this video, guys. So the VIX, yeah, VIX is at a very critical area here. You definitely want to be careful. Like I've been saying in the past few videos, every time the VIX gets between 14 and 15, it spikes up. I mean, it bounces or it spikes up. So you see here, it got as low as about 14.4, 14.3, bounced up, spiked up actually. Here, same thing. It got around 14.8. You know, gapped up here as well, got around 15, 14.8, gapped up as well. So every time the VIX gets within this range, you see a spike towards the upside. So you definitely want to be careful for a potential rug pull. It is a 3 day weekend, guys. So you definitely want to be careful. News can come out. I mean, you got 3 days of news that can possibly come out. And, you know, with our president, anything is possible at this point. So definitely be careful. I'm not saying we're going to crash or anything. I'm just saying, you know, considering the VIX, considering those alerts, considering what institutions are doing, and considering where we are on the triple Qs, the SPY, and the ES, I would say you definitely want to wait and get some type of confirmation before you start going crazy with calls. Can we see a little bit more upside? I do think that's possible. We can see a move towards 22,300. Highs I'm looking at is 22,500. But when you're considering the triple Qs and the SPY and where they are, it could easily turn into some type of rug pull. So be careful. Enjoy your Valentine's Day, guys, or enjoy your weekend, your 3 day weekend. Um, Relax, take a break. We lock back in next week. And until the next video, traders, have you a good one.